Hello dear students, welcome to the next lecture of CA Inter Corporate and Other Laws revision in English only. In this video, we are going to discuss the entire Negotiable Instruments Act. It has weightage of around 8 to 10 marks. So yes, it is an important act for exam, and in this video, we are going to cover the entire act in English language only. If you're watching my video for the first time, I am CA Preeti Aggarwal and I make videos specially for you. Do subscribe to your channel TheoryMasters Learning and hit the bell icon so that you get notifications for all the upcoming videos in English language only. Since ages, cash has been the most preferred medium of making payment. But with the growth, expansion of business, increase in the size of business transactions, it was not possible for the businessman to continue using cash for making payment. He felt the need to supplement the use of cash. He felt the need to use something else instead of cash. And that gave rise to the introduction of certain documents which could be used just like money. These documents are known as negotiable instruments. These documents are treated just like money. They can be used instead of cash. Now, the word negotiable means transferable by delivery. And the word instrument means a document carrying certain rights and duties. So these negotiable instruments are actually documents which are treated just like cash, which are used instead of money. Now there are many negotiable instruments, like we have check, promissory note, bills of exchange, government promissory note, hundis, delivery orders, bill of lading. There are many negotiable instruments. The benefit of these instruments can be transferred from one person to another just like cash. Now let's say that today you sold goods worth rupees 50,000. Somebody paid you 50,000 cash. You brought that home. Your parents said that we need 10,000 rupees to pay for a few bills, medicines. Your wife said, I want 5,000 rupees for household expenses. Now, what you did was remove that money from the 50,000 you earned today and made payment and gave it to them. They will use it further. Just like cash is easily passable from one hand to the other, these instruments, these documents can also be easily passable from one hand to the other. They are used just like money. There are many negotiable instruments, but the Negotiable Instruments Act applies, or it covers, only three negotiable instruments: promissory note, bill of exchange, and check. So there are many negotiable instruments, but the act that we are studying, it covers only three negotiable instruments. So can I say that the scope of this act is restricted to only three instruments? We have promissory note, bill of exchange, and check. Then what about the other negotiable instruments? They are not governed by the act. Instead, they are governed by local trade customs, traditions, usages. Now, what are usages? These usages are unwritten rules which have been followed in the line in let's say my line of business since many years. You will not find any act relating to them. You will not find a mention of them in any written document. But yes, these are unwritten rules used in my business since a very long time. So the other negotiable instruments are governed by special trade customs, traditions, local usages. Parties may decide that if there is no local trade custom, then yes, we will follow the act. So what is the meaning of the word negotiable instrument? The word negotiable instrument means transferable by delivery. Just like cash, these instruments, these documents can also be easily transferred from one person to another for making payment. Let's take the example of a bearer check. Okay, check is one instrument which you may have seen at home or in your place of work. I have a bearer check. Now, what is the meaning of a bearer check? What are the characteristics of a bearer check? In a bearer check, you can go to the bank and collect money across the counter. Nobody is going to question whether the check was issued in your name or not. The person who holds the check, person who goes with the check to the bank will get payment. So this bearer check is nothing but money. It is nothing but cash. Let's say that you got a bearer check from one of your customers. You don't want the money against it. Instead, you want to pay money to your supplier or to the manufacturer or to the employee. So you merely deliver, you merely hand over that instrument to, let's say, your supplier. That supplier will require money to make payment to to the manufacturer. So instead of going to the bank, withdrawing cash, he will then deliver this check, this bearer check, to the manufacturer. Can you see how this instrument is easily passable from one hand to the other, just like money? So what is the meaning of the word negotiable? The word negotiable means transferable by delivery. Just like money, you can transfer this instrument also from one person to another. So that is the main objective of the Act. The Act aims to legalize the system by which the instruments can easily pass from one hand to other like any other goods. See, whenever you have such kind of documents or instruments, you need to have an act which governs them. So the Negotiable Instrument Act aims to regulate the functioning of these three negotiable instruments. Now the word negotiable means transferable by delivery. That is what we just discussed. The word instrument means a document carrying certain rights and duties. Imagine you issued a check of rupees 5,000, but you had only 500 in your account, and maybe you forgot about it. You issued a check of 5,000 rupees, whereas you had only 500 in your account. The check got bounced, it got dishonored. The person to whom you had given the check has certain rights. He can take legal action against you for non-payment of the instrument. You have certain duty against that instrument. It is your duty to ensure adequacy of funds before issuing a check. So these documents that we are using to pay, we are using it just like money. We are using them to make payment. These documents carry certain rights as well as duties. There are few terms which we are going to use very frequently in this act. So I have listed those terms separately. I have explained the meaning separately. The first word that we need to know is meaning of the word order. See, bearer check, although it is treated just like money, it's a very risky instrument. What if you were going to the bank to, collect the payment against the check, and you lost the check on the road? A person who found the check can go to the bank, collect money, and run away. The bank will not argue. You cannot argue with the bank that he was not the person to whom you intended to pay money. It's a bearer check. Bearer check can be collected across the counter. So to safeguard yourself, you can issue either a cross check or an order check. Now, what is the meaning of the word order? Order simply means authorized person. Okay, it simply means authorized person. Now, how will you authorize a person to receive money against the instrument? On the back of the instrument, you will write the name of the person whom you have authorized to receive money. So let's say, for example, that I am now the holder of an order check. Okay, I am the holder of an order check. I don't want to receive the benefits against that check. Instead, I want to use it for making payment in my business. So on the back of the check, I will write pay to Z or order. It is an instruction to the bank that money should be paid to X or anyone. Sorry, money should be paid to Z or anyone authorized by Z. After I write that, I will sign on the check and deliver it to Z. That Z, I need to pay money to you. I had a check with me. I have endorsed that check. I have transferred the benefits of that check in your name. If you want, you can collect the money against that check, or you can authorize some other person to receive money. You can also use that check to make payment. So just like cash, you are using a check to make payment, and that person can use the check to make payment further. This negotiation can continue till the maturity of check. So what you have done by writing his name is endorsement. But mere endorsement will not be sufficient. How will he get the benefit? How can he make the payment further unless you don't deliver it to him? So the second essential is delivery. It may be a bearer instrument or it may be an order instrument. Delivery is required in both these instruments. See, if you want to make payment, you want to use that instrument just like cash, you will have to deliver that instrument to the other person. So be it any kind of instrument, delivery is the most important part of negotiation. That is why we say negotiation means transferable by delivery. There are a few common terms which I think you already know. There are three words which you need to remember, students. One is the drawer, then we have the drawee, and payee. Be it any instrument, promissory note, bill of exchange, check, meaning of these words will remain the same. Many students are confused as to what is the meaning of the word drawer, who is a drawee. So to explain it now itself, drawer means a person who draws the instrument. Okay, he draws the instrument. Drawee means a person on whom the instrument is drawn. He is the one who makes the payment. So he is on whom the instrument is drawn. Okay, so he is a person to whom on whom the instrument is drawn. And payee is always the person who receives benefit of the instrument. Is it clear? So who is a drawer? Drawer is a person who draws the instrument. Who is a drawee? Drawee is a person on whom the instrument is drawn. He is the one who will make payment. Drawer is a person from whose account the payment will be made. And payee is the person who receives the benefit. Now, whenever we make an order instrument, it is an instruction to the bank that payment should be made either to the payee, that is person named in the instrument, or anyone authorized by the payee. If you see the pro forma of a check, person who draws the check, person who signs the check is known as the drawer. Person in whose favor the check is drawn is known as the payee. Payee is the receiver of benefit. The person on whom the check is drawn, the one who makes payment, is known as the drawee. In this case, it is the bank. Okay, it will be the bank, that is the State Bank of India. So drawer means a person who draws the instrument. Payee is the person who receives the benefit. So here order instrument will be paid either to the payee because he is named in the instrument, or anyone authorized by payee. How will you authorize that person? We just discussed that, by endorsement and then delivery. What is the meaning of the word holder? Holder has three characteristics. Let us discuss those characteristics. Instrument payable to a person entitled in his own name. So holder means a person who is entitled to receive the benefit in his own name, and he also has possession of the negotiable instrument. To be a holder, you need to have these three characteristics. First is you should be entitled to receive the benefit of that instrument. How will you be entitled? See, the instrument is intended to be paid to you. If you don't receive the benefits of the instrument, you can take action. So you have legal entitlement, you have legal right to receive the benefit of that instrument. The instrument is in your name. It has been properly either drawn in your name or endorsed to you. And you also have possession of the instrument. Possession is nothing but delivery of the instrument. You have the instrument with you in your possession. If these three characteristics, if these three essentials are satisfied, then you are termed as a holder of the instrument. What is the meaning of the word bearer. Bearer means the instrument is paid to the holder on demand or presentment. On demand means you go to the bank, show the bearer check, demand money against that check. You present the instrument and you demand money. You will get the money immediately in case of a bearer check. Bearer check is payable on demand. It means that you don't have grace days. You go to the bank, you show the bearer check, you will receive the money immediately without any grace days. So that is the meaning of the word payable on demand. Then what is the meaning of payable to a holder in due course? Who is a holder in due course? This is one of the most essential, this is one of the most important concept of the Negotiable Instrument Act. If you understand this concept, it means you have understood the entire act. Now students, in order to help you to understand that, I have a small example. Now this example will help you to understand the concept of a holder in due course. Let's say that X is an employer and he's going out of station. He will be gone for like 15 to 20 days minimum. Now he knows that while he is away, the business will have to pay the electricity bill. So he leaves a blank check with his employee. Okay, so he gives his employee a check and he merely signs on the check. I'll draw a check for you. X merely signs on the instrument. He does not fill in the amount because he does not know the amount of electricity bill that he needs to pay. He doesn't fill anything on the check. He doesn't even write the date. He merely signs on the check, trusting that Y will use that check to pay the electricity bill. But his employee Y is very smart. Now Y knows that he has received a blank check. It is just like money. He writes his name as a payee. Pay Y. Fills in an amount of rupees 15,000. On the back of the check, he writes pay Z or order. Now, why is he doing so? Y wanted to make payment to Z. Let's say that the payment was of rupees 15,000. So, on the back of the check, he writes pay Z or order and Y signs the check. He then hands over the check to Z. Z accepts the check in good faith without doubting Y. See, Z was not aware that Y never intended to receive the payment. He was not the owner of that check. What did Z see? He saw that the check was issued in favor of Y. She checked the amount 15,000 rupees. That is the amount that Z had to recover from Y. Z checked whether the instrument was properly dated, whether it was received within the maturity period of the check. After looking at all those elements, Z accepted the check in good faith. For value or for consideration. Anyway, Z had to recover 15,000 rupees from Y. Now Y, instead of paying cash, paid check. So Z accepted that. It was a business transaction for which she is receiving money. And before maturity. She checked the maturity of the instrument. It was well within the maturity. And then accepted the check. Now, the main question arises that Y is not the owner of check. We never intended Y to have the money. Will Z acquire ownership? Will Z become the owner? See, this is our basic question. In Sale of Goods Act, you must have studied that if Y is not the owner, then Z will also not become the owner. You cannot give what you do not have. But if Z is not made the owner, people will always be in doubt while accepting a negotiable instrument. Z is accepting an instrument drawn by X whom she doesn't know. She knows Y in whose favor the check was issued. She doesn't know the person who is drawing the check, but she is still accepting it in good faith. If she always has that doubt that what if Y is not the owner of the check, what if such kind of a transaction has taken place? No, Y, I insist that you only draw the check. if we don't give a good title to Z, nobody will accept a negotiated instrument. So in order to encourage negotiability, we tell Z, don't worry, accept the instrument in good faith. Even if Y is not the owner, you will still get good ownership title. Transferee will get good ownership title. He will get a good title even if the title of transferor is defective. This is the benefit or the privilege given to a holder in due course. See, she becomes the holder. She is holding the instrument in due course. It means that ultimately it has reached Z in the due course of negotiation. You are the holder. You are a holder in due course. By default, every person is assumed to be a holder in due course unless somebody challenges that. So what are the three requirements of a holder in due course? You have to accept the instrument in good faith for value, that is for consideration, and anyways instead of money you have accepted the instrument, and before maturity. If these three conditions are satisfied, then you will get the privileges of a holder in due course. And what is the privilege? Transferee, that is Z, will get a good title even if the title of the transferor is defective. Alright, so can we say that this is an exception to the rule that you cannot give what you do not have? Yes, this seems like an exception. If this question is asked in your examination, you can confidently write that example. You can explain it because it's a genuine example based on a case. So what are the characteristics of a holder in due course? Let us quickly discuss. That person who becomes the possessor of the instrument, he has obtained the delivery of the instrument in good faith. Okay, he has obtained it in good faith for valuable consideration and before maturity. So if these three conditions are satisfied, then you are a holder in due course. You have to hold the instrument. You have to be in possession of the instrument. Only once you are a holder, you will become a holder in due course. So most important concept of this act. Then let us discuss the negotiable instruments one by one. And first we have the concept of a promissory note discussed under section 4. The definition of promissory note is very, very important because you will get the elements from the definition itself. So if you are appearing for any examination, you will have to memorize the definition because the essential elements can be derived from the definition itself. Now, I know students, it is not possible for you to memorize the definition. That is why I have broken it into small parts. Okay. Now we are going to discuss each and every part, each and every element of the definition. Section 4 covers definition of the negotiable instrument, that is promissory note. I'll just change the ink for you. Okay. Section 4 defines a promissory note as it is an instrument not being a bank note or a currency note. Why is currency note specifically excluded? Now, have you ever seen what is written on the currency note? It says, I promise to pay the bearer a sum of rupees. Let's say it is a 500 rupee note, so a sum of rupees 500. The words use I promise to pay the bearer show that it is a promissory note. But we have specifically excluded this from the definition of a promissory note. Now, why? Imagine one day Mr. Mukesh Ambani went to have dinner at a restaurant. The bill was of 25,000 rupees. He checked his wallet. Oh, he forgot his wallet at home. So he took a piece of paper and on that blank piece of paper he wrote, I promise to pay the bearer a sum of rupees 25,000, and he signed that instrument. He gave it to the restaurant owner. Now, if Mr. Mukesh Ambani is giving that document, we have no reasons to doubt. Congratulations. He has just created or he has just issued a note of 25,000 because Mukesh Ambani has promised to pay anyone, any bearer, means any person who comes to him, a sum of rupees 25,000. Don't you think that if people start using the exact words written on the currency note, it is as if they are issuing more currency note? You and I cannot issue currency note. That work can be done only by the RBI or the central government. So in order to discourage people from, using these words on the promissory note, using the words which are similar to a currency note, we say that a currency note is not a promissory note. It means that the words used on the currency note cannot be used in a promissory note. In other words, it also means that you cannot make a promissory note payable to the bearer. All right. So instrument means a promissory note means an instrument not being a bank note or a currency note. It should be in writing, because writing can be negotiated further. How will you negotiate? How will you endorse an oral promise? Oral promise may be a contract, but it cannot be a valid promissory note, because these negotiable instruments have to be in writing so that we can negotiate them further. It contains an unconditional undertaking. It means no conditions are attached. Instruments should be negotiated at all events. Now, how can I impose conditions? What if I write on the promissory note that I promise to pay 5,000 rupees provided I have enough money? I promise to pay 10,000 rupees provided Amit marries Anita. I promise to pay 50,000 rupees if it rains today. These are all conditions. They may be valid, they may be binding on you and me, but how will you negotiate the instrument with those conditions? What if the other person is not accepting those conditions? So in order to be a valid promissory note, you should have an unconditional note which is payable at all events. All right. It must be signed by the maker, because signature shows authentication. If the instrument is not signed, it will be an incomplete or an inchoate instrument. It must be to pay a certain sum of money, certain words. Now see students, I have highlighted the keywords. They have to be present in your answer. The amount must be certain, and it should be a promise to pay money and money only, nothing in kind. You cannot say, I don't have that much cash, except 5,000 in cash, and rest I will give you a horse. I will give you a horse for the balance. That is not a valid promissory note. You can pay only, you can promise to pay money and money only, nothing in kind. It is a promise to pay money either to the order of a certain person or to the bearer of the instrument. Order means that I promise to pay money either to the payee or anyone authorized by the payee. But it also includes a promissory note payable to the bearer. Ma'am, but you just said that we cannot issue a bearer promissory note. Yes, students, this part of the definition is redundant, because now we have, after section 31 of the RBI Act 1934, after this section only the central government or the RBI can issue more currency note. That is why you cannot use the word bearer in a promissory note. But ma'am, it is written in the definition. This part has become redundant. I think they have forgotten to amend the definition. Okay, so this is the definition which I have broken down for easy understanding and memorizing. Let us now read the other essential elements from my chart book. So what is a promissory note? Promissory note is an instrument not being a bank note or a currency note. It is in writing. Writing shows authentication. So that is the first essential of a valid promissory note. It must be in writing. It must be signed by the maker, because signature shows authentication. The instrument must be in writing as well as stamped, and you should sign across the stamp. Okay, some part of your signature should be on the stamp. Signature shows authentication. No signature means that the instrument is incomplete instrument. It must be a definite and unconditional undertaking. All right, this is the third essential of a valid promissory note. The promise must not be conditional. How will I know that it is conditional? Conditions mean that I will pay when I am able to pay. I will pay as soon as possible. This shows uncertainty. I will pay after Amit marries Anita. If you are imposing condition, it may hold good between you and me, but it may not hold good while negotiating it with this other person. Unconditional unconditional promissory note is not valid. Conditional promissory note is not valid. The promissory note must be unconditional. It means payable at all events. But yes, you can write, I will pay after a specified period of time. Like, I promise to pay X, a sum of rupees 5,000, 2 months after today. Okay, so you can specify the time limit because that is certain. You will pay. I will pay on happening of an event like death. This is super important for any exam that you are giving. I promise to pay 5,000 rupees to Y on death of X. Now, this is also a condition. I will pay when X dies, but there is no uncertainty. Death is an event which is certainly going to happen. Only the time is unknown. So if I promise to pay money on the death of X, even though it is a condition, but that condition is bound to happen, only the time is not known, it is a valid promissory note. I promise to pay certain amount of money and money only, nothing in kind. So the amount must be certain and it must be to pay a sum of money and money only. Now, what if I make a promissory note of either 5,000 or 7,000? So I have written on the promissory note, I will pay either 5,000 or 7,000. I have not decided. It is not a valid promissory note because you are restricting free circulation. Of what amount will you circulate the bill? Is it valid for 5,000 or is it valid for 7,000? So in order to make the instrument certain, to bring more clarity, you need to have a certain amount mentioned in the instrument. An event is certain if it includes future interest. Like, I will pay you 5,000 along with 10% interest per annum. Or I will pay you at exchange rate of 70 rupees per dollar. So that amount must be certain, the rate must be certain, then it is a valid promissory note. Or I will pay you at an exchange rate prevailing on the due date. So whatever is the exchange rate on the due date, that exchange rate will be applied. That also shows certainty. It must be to pay money and money only and nothing in kind. So if you promise to pay something other than money, either in full or part payment of the promissory note, it is not a valid promissory note. The payee must be certain. The person to whom you are promising to pay must be easily identifiable. It shows that it cannot be made payable to the bearer. No person other than RBI or the central government can issue a promissory note payable to bearer, because if we write, I promise to pay money to the bearer, it will resemble a currency note, and you and I cannot simply write on a piece of paper and issue currency note. So promissory note cannot be made payable to the bearer. The person must be certain. Only the RBI or the central government can make or issue promissory note payable to bearer. However, a bill of exchange can be made payable to the bearer, but in that case time must be written. So I'll give you a small note which you can write it separately. In case of a bill of exchange, if you want to make a bearer instrument, then you also need to specify the time. Okay, in case of a bill of exchange, if you want to make an instrument payable to bearer, then also specify the time. 2 months after date, I promise to pay the bearer of this instrument. It means that the instrument will be considered like money only for 2 months. After that, it will expire. 3 months after date, I promise to pay the bearer. That is allowed. But you cannot promise to pay bearer on demand. What is the meaning of demand? On demand means the time is not specified. I will pay whenever demanded. So you cannot have the words bearer on demand together, because that will be treated just like money. I promise to pay the bearer whenever he demands. There is no time limit specified. It means that it will be considered to be just like money. It can be used forever. If you want to make an order instrument, that can be made on demand. I promise to pay order of a person, means either payee or an authorized person, whenever they demand. So you can use the word on demand, but mention the name of the order, mention the name of the authorized person. I will pay money to X whenever he demands. If you are writing name of a person, an authorized person, then you can have a demand instrument. But in case of bill of exchange, you cannot have the instrument payable to bearer on demand, because this will be treated just like a currency note. Is it clear? Okay, next we have a bill of exchange discussed under section 5, but there is a huge definition, so we need to break that definition into small parts. According to section 5 of the Negotiable Instruments Act, bill of exchange is an instrument in writing. So this is the first requirement of a bill of exchange. These, the words which I have highlighted in green, they are the key words. They should be present in your answer. So it is an instrument in writing. Writing shows authentication. So your negotiable instrument has to be in writing. Only a written document can be negotiated. How will you negotiate an oral promise? It can be a valid contract, but not a negotiable instrument. It contains an unconditional, not a request, but an order to pay. Unconditional means no conditions attached. A bill should be payable at all events. It's not just a request, it's an order, but it should be written in polite words. 2 months after date, pay. 3 months after sight, pay. You're ordering the drawee to make payment to the payee or anyone authorized by the payee. It should be signed by the maker because signature shows authentication. No signature will make the instrument an inchoate or an incomplete instrument. It directs a certain person. It means the person that is the drawee must be certain, must be a definite person, clearly identifiable person. To pay a certain amount of money, it means the amount must be certain. You cannot make a bill of exchange payable for either 5,000 or 7,000. The amount has to be certain. Otherwise, you will not know of what amount should I negotiate the instrument. Should I negotiate for 5,000 or 7,000? It must be to pay a certain sum of money and money only, nothing in kind. Only to or to the order of a certain person. It means that the payee must be certain, or to the bearer of the instrument. If you are making a bearer bill of exchange, it should contain the time also. You cannot have bearer on demand words together. All right, now that we have discussed the definition, let us quickly highlight the characteristics again. It is an instrument in writing containing an unconditional order signed by the maker. It should not be maker, it should actually be the drawer, but I think they have just copy pasted the definition. Directing a certain person, the person must be certain to pay a certain sum of money and money only to the order of a certain person or to the bearer of the instrument. So there are three essential characteristics hidden in the definition itself. What is the first one? It should be in writing. Writing, and there should be a stamp as well. Do you remember making that stamp while drawing the format in standard 12th? Okay, everybody would love to make that format. So it is to be written, it should be stamped. Signature shows authentication. Bill must be signed by both the drawer as well as the drawee. As I already discussed with you, drawer is a person who draws the instrument, payee is the person who receives the benefit of the instrument, and drawee is always the person who makes the payment. In case of bill of exchange, there are three parties. We have the drawer, drawee, and the payee. Drawer is the person who draws the instrument. He is the creditor. Drawee is the dater. The one who makes the payment is the dater. And then we have the payee. Payee can either be the drawer himself or some third person. These are other essentials: that it must be a definite and unconditional order to pay, not just a request. It must be unconditional. It means there are no conditions attached. Bill must be payable at all events. It must be an order to pay a certain sum of money. The amount must be certain. Order to pay anything other than money. You can't promise to pay either whole or part in kind. That will make the instrument invalid. It must be to pay a certain person or to the order of a certain person or to the bearer of the instrument. The person must be certain, that is payee must be certain, or we can pay his order or bearer of the instrument. Then we have the concept of acceptance. Now, what is the meaning of acceptance? Acceptance means you are agreeing to pay the amount of the instrument. Now, how will the drawee show his acceptance? For showing the acceptance, he will put his signature on the bill. Signature is compulsory. Writing the words accepted is not legally required. What you need to do is just simply mention the simply sign the instrument. This shows that it has been accepted by the drawee. After doing that, he either delivers the instrument or gives notice of such acceptance to the holder of the bill or some person on his behalf. See, delivery is very important. It is the most important part of negotiation. How will the drawer start negotiating? How will he transfer the benefit unless and until he has the instrument with him? So what is the procedure? Drawer draws a bill on the drawee. Drawee will accept the instrument and give it to the drawer. Then the drawer will use it just like money and pay it to his supplier or any person to whom he is liable to pay money. The drawee, by signing on the instrument or giving notice to the holder, don't worry, I have accepted the instrument, it shows that he has accepted the instrument. He is bound to pay when the bill is presented to him on maturity. Only a bill requires acceptance. Why is it so? Why is only a bill required to be accepted? Think, students, think. What do you feel? Okay, if you say this, then your answer is correct. In case of a promissory note, drawer, or we should say maker, okay, in case of a promissory note, maker is the debtor himself. So if he himself is promising to make the payment, there is no question of acceptance. In case of a bill of exchange, who draws it? It is the creditor. That is why he needs to give it to the debtor for acceptance. What about a check? In case of a check, the drawer is the debtor himself. So he himself is drawing the check. He himself is making the payment. There is no question of acceptance. So in case of promissory note and check, the person who has to make the payment himself is drawing that instrument. That is why it does not require acceptance. But in case of a bill of exchange, the creditor, the one who has to receive the payment, is drawing the instrument. That is why it requires acceptance from the person who promises to pay. What are the essentials of acceptance? Can be asked as a question in the exam. The acceptance must be in writing. You must sign the instrument, only then it shows acceptance. Writing the word accepted is not legally required. It must be on the bill and you must deliver the instrument after acceptance. There are different types of acceptance. We have general acceptance, qualified acceptance. Now, what is the meaning of a general acceptance? General acceptance means that you are accepting the bill without making any changes in the instrument. So there is no modification, there is no variation. You are accepting the bill as it is. So the drawer drew an instrument of 5,000 rupees payable in Mumbai. The drawee accepted the instrument without making any change in the instrument. But what if the drawee accepts the instrument by subjecting it to some qualification, modification, variation, some change? Then that is known as qualified acceptance. Qualified acceptance is not valid acceptance. Now, I have made certain changes in the place. Let's say it was payable at Mumbai, but I say no, I will pay it at Navi Mumbai. The amount was of 10,000 rupees, but you wrote I accept it for 9,000 only, and you sign the document. Now in this case, you're not accepting the instrument as it is. You're making some kind of modification, variation, change in the time, place, amount of the instrument. That qualified acceptance will make the instrument invalid. But what if X drew an instrument on Y accepted the instrument, X then negotiated it to Z, Z to A to B. The bill was of 10,000 rupees. A bill can be negotiated even before acceptance. So let's say that X drew a bill on Y. Y had agreed that whenever you bring it to me, I will accept it and make the payment. So X, trusting that, negotiated the instrument to Z, Z to A to B. When B presented the instrument to Y, he accepted that instrument for 9,000 only. Now B should have refused this acceptance. He should have said, no, 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 I will not accept this bill is of 10,000. You have to accept for 10,000 only. But what if he accepts it? Then that acceptance is binding only on Y and B. Others are not liable. So B, if he receives only 9,000 rupees, he cannot recover 1,000 rupees from Z, A or X unless he obtains their consent to this qualified acceptance, unless he informs them that, listen, Y is accepting only for 9,000, will you guys pay me the remaining 1,000? If he obtains their consent only, then he can recover that balance 1,000 rupees from them. Otherwise it is not binding on the parties who do not give their consent. Then let us discuss the concept of check. For that also, let us break it. According to Section 6 of the Negotiable Instruments Act, check is a bill of exchange. Very good. It has made my work easy, because since it is a bill of exchange, all the characteristics, all the essential elements of a bill will apply to check also. It is drawn upon a specified banker. Banker is my drawee. It is payable on demand. Check is an instrument which is always payable on demand. On demand means you can go to the bank, demand money from them. They will make the payment to you without asking for grace days. In case of a bill of exchange, what happens? When you present the bill to the drawee for making payment, he is bound to make payment after 3 grace days. So it is granted to him. Okay. How will you calculate the date of maturity? It is due date plus the grace days. So over here, in case of check, it is always payable on demand. It means there is no question of grace days. For a bearer check, you just go receive the money immediately across the counter. In case of a cross check deposited in your bank, as soon as it is cleared, you will immediately get money. It includes an electronic image of a truncated check and a check in the electronic form. Now, the definition given in the Act, it explains the term truncated check as well as a check in electronic form in detail. What is happening? It explains that in detail. But if you're not able to remember that for your exam, then it is fine. You can either skip it or write it in your own words. Now, what is a truncated check? If you notice on the check, you will find the letter CTS. Okay, that is check truncation system. Now, what is the meaning of CTS? Earlier, they would send the check physically to the clearing house. The clearing house would then check whether there is money in the amount in the account of the drawer or not, whether the signature is tallying with the specimen signature, whether the amount, date, everything is written properly or not. This physical movement would make the clearing of check a very delayed process. Like you would get the amount credited in your account after 5 to 6 working days. But because of truncation, now you need not send the check physically to the clearing house. You can only send an electronic image of that check. So today we scanned it, we sent it to the clearing house, they got the image, they did all the verification, and the check is now cleared in limited time. Sometimes if it is of the same bank, you get the credit on the same day. Okay. So because of CTS, there is no physical movement of check and the clearing takes place faster. It also includes a check in the electronic form. Now, ICICI Bank has introduced a check in the electronic form. You are given a stylus and the check is shown on the tablet. You fill in the details, sign using a stylus, and you need not go to the bank. You can give your customer an electronic check. So they can also get the payment without going to the bank. So you use a stylus, then the information is sent through an encrypted way. There is a public key or a private key, which is nothing but your password. So everything is properly encrypted. It is in a secure system. But again, this electronic check has now ensured that people use this check frequently without traveling to the bank or without going to the person to deliver the check to him. So that was the meaning of check. Now, check is a bill of exchange. It means all the essential elements of a bill are present in the check. It is drawn on a specified banker. Banker is your drawee. It is always payable on demand. You can go to the bank, demand money, you will get money. They will never refuse. They will not even ask for grace days. It includes an electronic check. It is a check drawn using the computer. It also includes a truncated check when the physical check is truncated during the clearing process. So instead of sending the check physically, you just send an electronic image of the check. This is just a pictorial representation of the concept that we studied. The drawer gives an unconditional order, not a request, but an order to a specified banker to pay a certain sum of money to the payee. The check is in writing, it must be signed by the drawer, it is always payable on demand. Any of this information, if missed, then that will make the check an incomplete or an inchoate instrument. Bank will not clear your check. Validity of the check is for 3 months and there is no need of stamp. So these are other characteristics of a check. What are the different types of check? We have a bearer check, order check, or crossed check. Now, bearer check is a check which is paid across the counter. It can be negotiated by mere delivery. You need not even write anything while negotiating, while endorsing it. Order check. Order means that the amount is paid to an authorized person. How will you authorize that person? By writing his details on the check. So you can endorse and deliver this order instrument, and that is how you negotiate it. So if you want, you can also write the way of negotiation. Bearer check can be negotiated by mere delivery, whereas an order check can be negotiated by endorsement as well as delivery. Delivery is common, but there are different ways in which you can negotiate the instrument. So bearer instrument, mere delivery, order instrument by endorsement as well as delivery. Endorsement means you are writing the person to whom you want to transfer the benefit. That process is known as endorsement. Cross check, it means drawing two parallel transverse lines on the face of the check, generally on the top left corner of the check. You may or may not write words inside it. Like you can just simply put two parallel lines. That is known as general crossing. Sometimes trade customs may want you to write and company or and company. These words don't have any meaning, but they're just written as a trade custom. Like people write it, so we also write. Sometimes we write name of a bank between those two parallel lines, and then it is known as a special crossing. So let's say I have written Dena Bank. It is an instruction that the check must be deposited in this bank only. It can be collected through Dena Bank only, but I don't have an account in Dena Bank. Open a bank account. Only then you will be able to deposit the check. It can be collected only through a particular banker. There is an important concept of not negotiable crossing. Now, what does that mean? Not negotiable crossing doesn't mean that you cannot negotiate the instrument. It simply means that the main feature of negotiability will not be available. What is the main feature of negotiability? Older in due course. If the instrument is crossed, not negotiable, that doesn't mean you cannot negotiate the instrument. It simply means that if the title of the transferor is defective, the title of the transferee will also be defective. You will not get the benefit of holder in due course. So not negotiable crossing does not restrict further transferability of check. It simply takes away the main feature of negotiability, which is nothing but benefits or privileges of a holder in due course. If title of the transferor is defective, title of the transferee will also be defective. So that is the meaning of not negotiable crossing. Is it practically used? Yes, I have seen a not negotiable crossed check when you get refund from the IT department, income tax department. Sometimes it is written, yes, I have seen it, not negotiable crossing is written on the check. So that is to protect the interest of the parties. If it falls in the hands of a wrong person, he will not get a good title and he will not be able to transfer a good title. So it's a very good way to ensure that the funds are received only by the person who is intended to receive that money. Then we have cases where the banker must refuse to honor the instrument, and there are certain cases where he may refuse to honor the check. Now, there are certain cases wherein the banker must refuse. So let us highlight that he must refuse to honor the check. It can happen when there are insufficient funds, check will bounce. If you have issued a check when there were insufficient funds, it's a criminal offense and you will be held liable under section 138 of the Negotiable Instruments Act. For any kind of exam, this is a very important section number. In case of dishonor, okay, in case the check is dishonored due to insufficiency of funds, then that is considered as a criminal offense. You will be subject to imprisonment up to 2 years or fine not exceeding twice the amount of check. So if the amount of my check is 5,000 rupees, maximum fine that the banker can take from me is 10,000. Sometimes we may be even subject to both. But many a times you are not put in prison for dishonoring of check. See, imprisonment will be only when the check is of very high amount, there is intention to fraud, or it is something which is happening very frequently, or there is some kind of fraudulent intention, then there is imprisonment. Otherwise, the bank will merely charge some fine from you. They will impose some small 500 or 700 rupees of penalty. Now, it is also mentioned that these offenses under the Negotiable Instruments Act are compoundable. What are compoundable offenses? Compoundable offenses are those offenses which can be compromised between the parties. Let's say bank was very angry. Okay, bank was very angry that the check is dishonored. So they filed a case, or you can say that the payee, okay, filed a case against the drawer that your check is dishonored. But ultimately, after filing the case, payee realized that this is waste of time. Let me just compromise it with the drawer. He says, okay, in case the check is dishonored, you pay me 1,000 rupees and I will not pursue the case further. So in that case, it's a compoundable offense. It means it can be mutually settled, mutually compromised between the parties. That compromise means the bank is charging just fine from you so that you don't repeat the offense, but they may not put you in prison. Compoundable offenses, when compromised, the trial ends there and there. Then the trial will not continue. The case ends over there. Non-compoundable offenses are those offenses which are very serious in nature, like dealing in arms, ammunitions, trafficking. They cannot be mutually compromised between the parties. They can only be quashed. Okay? No compromise, you will have to file the case and that will go to the court of law. Presentment after banking hours, you are presenting the check after banking hours, it will not be honored. Stale check, the maturity of the check is 3 months. You are coming to the bank with the check after 5 months. It's a stale check. We will not honor it. Undated check, post-dated check. Undated will make the instrument incomplete. Post-dated check. The check is dated 31st December and I went to deposit the check on 1st April itself. Come in December. Cases where they may refuse. Okay, they may refuse to honor the check. In case of loss of check, that will amount to stop payment of check. Insolvency or insanity of customer, the bank will not honor the check unless they receive or until they receive further instructions on what to do. Customer signature is not tallying with the specimen signature, they may refuse. Now sometimes it happens that it is not tallying, the system is showing error, but when you physically check the check with the specimen, you find it to be correct. Sometimes the system may reject, but the bank may not reject. Okay, material alteration not authenticated by the customer's signature. Suppose you have written the spelling of 100 incorrectly on the check. What you do is you make that correction and then you have to sign full signature on the check. Okay, but sometimes you forgot. Okay, there was a spelling mistake, you forgot to authenticate it. Bank knows you since 25 years. You are a very old customer. They may honor your check or they may dishonor your check because you have not authenticated that correction with your signature. So it depends on the bank. Sometimes they also ask you to draft a new check, depends on the bank. Okay. Notice of death. Now Mr. X, our account holder, died and we got his checks worth rupees 20 lakhs. Who is issuing the check? Customer has died, we come to know about it. We will wait till we obtain further instructions. So bank will not honor the check in case they know about the death. They will hold it till they receive further information. There is a section which is related to section 138. Now, under 138, person had the right to take legal action in case the check is dishonored due to insufficiency of funds. Okay. If the check is dishonored, you had the right to take action, but where, which court, that was not specified in the act. Section 142 has given a lot of clarity as far as the place is concerned, that what is the place, which is the court wherein we can file a case. Now, to help you understand these points, I have an example. This is a genuine example. You can write it in the exam. Okay. Just adjust the slide a little for you. Mr. X is an account holder of XYZ Bank, 4th branch, Mumbai. He issues a check in favor of account holder Y of PQR Bank, MG Road branch, Pune. Mr. Y deposited that check in the Nagpur branch of PQR Bank. He had gone there for some work. So he deposited the check in Nagpur. Unfortunately, the check is dishonored. Now the question arises, where should we file a case? Should we file the case in court having jurisdiction in the 4th branch of Mumbai? Or should we file a case in the court having jurisdiction where PQR Bank, MG Road branch, Pune is located? Or should we file a case in the court having jurisdiction over the Nagpur branch? There are 3 places. Where should we file a case? That clarity was not given under section 138. So in section 142, we have clarified very clearly, they have given that in case you are depositing a check, it means that it is a crossed check. Only a cross check has to be deposited, no? If it's a cross check and you're depositing the check, it is dishonored, case will be filed in the court having jurisdiction where the account of PQR Bank, MG Road branch, Pune is located. So if it is a cross check, case will be filed in the court having jurisdiction where the PQR Bank, MG Road branch of Pune is situated. What if it is a bearer check? X is the account holder, same example, of XYZ Bank, 4th branch, Mumbai. He issues a check in favor of Y, an account holder of PQR Bank, MG Road branch, Pune. But Y deposits it in the Nagpur branch of XYZ. Sorry, he presents it, not deposit. He presents the check. I'll highlight the word present, which shows that they are discussing a bearer check, because only a bearer check needs to be presented across the counter. So he issues a check in favor of Y. Y presents it to the Nagpur branch of XYZ Bank. Why XYZ Bank? In case of a bearer check, you have to go to the same bank as that of the drawer. Can be a different branch, but bank has to be the same. So he approached the Nagpur branch of XYZ Bank. The check is dishonored. Now law says that case has to be filed in the court having jurisdiction where the XYZ Bank 4th branch of Mumbai is situated. So case will be filed where the in the court having jurisdiction where the XYZ Bank's 4th branch Mumbai is situated. So court having jurisdiction over that 4th branch. So complaint will be filed before the court having jurisdiction where the 4th branch Mumbai of XYZ Bank is situated. But this is possible only in case of a bearer check. Is it clear? It can happen only in case of bearer check. Now let us read it. When a check is delivered for collection through an account, it means they are talking about a cross check. Case can be filed where before the court where the branch of the bank is situated, where the payee or the account holder in due course maintains the account. So I have repeated the same points, but in simpler words. Where it is delivered for collection through account, that is, they are talking about crossed check. Case will be filed in the court having jurisdiction where the branch of the payee or the holder in due course is situated. But what if it is an across the counter check, that is a bearer check? Case will be filed in the court having jurisdiction where the branch of the drawer is situated. So that is section 142(2). Next, let us discuss the liability and protection of the banker. Now, let's say that the drawer drew a check in favor of the payee. The drawer has his account in the State Bank of India, and the payee to whom the check is given has an account in ICICI Bank. The drawer's account is also known as the paying banker because that is the banker that is going to pay money. And the payee's banker is also known as the receiving or collecting banker because it is going to collect the money. Okay, so you should understand these two concepts first, paying banker and the collecting banker. Now, let's say, for example, that drawer has drawn a check to the payee. Payee kept the check in his drawer. He was in the office, he kept it in his drawer. An employee stole the check. He forged payee's signature. Okay, payee's signatures are forged by an employee. He then endorsed it to F to G. Now, G went to the paying banker and collected the payment. Paying banker saw whether the signature of the drawer was correct, whether he had sufficient funds, whether the date was mentioned correctly, whether the signature was matching with the specimen signature, and he honored the check. Later, it was known that the signatures of the payee were forged. Can we blame the paying banker for making the payment against the check? Can you tell him, don't you know that the payee's signatures were forged? How will he come to know whether the payee signatures were forged or not? Does he have the specimen signature of the payee? He has the specimen signature of the drawer. You cannot blame the paying banker for forgery in cases other than forgery of the drawer. See, if the drawer's signatures are forged, then yes, we can blame the paying banker because they have the specimen signature of the drawer. But in case of forgery of the signature of payee, agent has committed some kind of forgery or endorsement without any authority from the principal, you can't blame the paying banker in that case. So the paying banker is protected even in case of any forged endorsement. If the check is crossed generally and the payment is made to a banker or to a specified banker in case of a cross check. Now, cross check is deposited in the bank. You cannot blame the paying banker if they have acted in good faith. They checked the signature of the drawer with the specimen. They checked adequacy of funds. They checked the date. They checked all the other details. They have made the payment in good faith. You cannot blame them. Very important to highlight. When the drawer's signatures are forged, then the paying banker is not protected. See, drawer's signatures are forged. It should have been identified by the paying banker. Then they are not protected in that case. Okay. What about the liability? It is a repetition of the earlier point. They shall be liable if the loss is caused to the true owner in case you pay the check otherwise to the banker, or you pay a cross check otherwise than to a specified banker. See, the paying banker has to make the payment to a specified banker. If you make it otherwise, you did not check the signatures properly, you did not verify the other details. If you have not verified the details and you have made the payment otherwise, not in good faith, then we will blame the paying banker. Not very important. But protection to collecting banker, yes. Now, G presented the check, obtained payment. The banker was not aware that payee signatures were forged. Can you blame the collecting banker in this case? No, you can't blame the collecting banker because the collecting banker has collected the proceeds in due course. They verified whether the check is deposited by G within the date of maturity. They verified whether the signature is properly written, whether the check is complete in all the aspects. You can't blame the collecting banker if he has received the customer's check in good faith. He is not liable in case of defective title of the check. So collecting banker will only collect the amount for his account holder. You cannot blame him if he has acted in good faith and in due course. These are few important sections which you can go through. From the entire act, I have identified the important sections, and these are the sections which are important from exam point of view. Okay. Now students, you can buy this chart book from my website theorymasterslearning.com. This chart book is in a colorful and attractive form, exactly how you can see here. It covers the entire act in simple and easy to understand charts. There is a perforation. You can tear it and paste it on your wall. Look at it every day. And when you see the provisions every day, you will automatically register it in your mind. So there is a perforation to enable easy tearing of pages. If you don't have a big study space, then you can just tear one single page, attach it. While you're studying this act for 2 or 3 days, look at it, and then yes, you will be able to remember all the provisions by heart. Okay, let me proceed. Then we have classification of negotiable instruments. Now, negotiable instruments may be classified and on the basis of payee. You can pay it to the order or you can pay it to the bearer. In case of order, money will be given either to the payee or anyone authorized by the payee. In case of bearer, it is payable to the bearer, the holder of the instrument. And in this case, bearer means an instrument which is expressed as such, or the last or the only endorsement is blank. Now, what is a blank endorsement and how does it make the instrument a bearer instrument? Now, this is a check. On the back of the check, I have only signed without writing the name of the person to whom I want to endorse. So if the name of the endorsee is not given, we have only signed, endorser has only signed, then this is a blank endorsement. That blank endorsement turns any kind of instrument, be it originally bearer, be it originally order, it turns the instrument into a bearer instrument. So if it is expressed as payable to the bearer, or if it was issued as an order instrument, but ultimately because of blank endorsement, it has turned into a bearer instrument, then that is also known as payable to the bearer. On the basis of maturity, we have demand instrument. In this case, the time is not specified. That is, when is the payment to be made? The time is not specified. It means the payment is to be made whenever demanded. So whenever the instrument is presented to us, we have to make payment. There is no grace days in this case. Maturity date is not specified. No time is given. Expressly payable on demand, at sight, on presentment. No grace days are provided because there is no time period. How will you calculate the grace days? You have to pay whenever demanded, whenever presented. But what if the time is given, like it is payable 2 months after date, 3 months after sight, or it is payable on 2nd April, the date is mentioned, or it is on happening of a certain event, that is, I will pay 15 days after 15th August. Okay, after Independence Day, I will pay 15 days after Independence, or I will pay money on the death of X. So if there is some specified certain event, then in that case, the payment will, the maturity date will be calculated by adding 3 days of grace. So due date plus 3 days of grace. The instrument has to be presented on the last day of grace. If you present it before, drawee is not obligated to make the payment. This I think you are already aware of. You must have studied in 12th standard. In case the payment is to be made on a specified date, let's say for example, I want you to make the payment on 2nd of April. Then the maturity date will be 2nd, but leave that. Half a day you will leave it, 3rd, 4th, 5th. The maturity date will be 5th of April. If it is payable on a stated day of or months, 2 months after date, 3 months after sight. So after date, it means it will be calculated from the stated number of days, date on which it is drawn plus the stated number of days plus 3 days. After sight means the day when it was presented plus the number of days or months, and the grace days on happening of certain event, when the event happens, plus days or months. And I think you already know how to calculate maturity period when days are given, months are given. When days are given, you will have to calculate each day. When month is given, you will have to calculate, let's say from 5th April to 5th May to 5th June. If it has less number of days, that doesn't matter. The day on which it is presented or the date of event, that will be excluded. What if there is it is a public holiday? Then on the next preceding day, that is before. If it is an unforeseen holiday, I didn't know, like suddenly we won many gold medals in the Olympics and a holiday was declared, then on the next proceeding day, that is the next working day, on holidays which I know of, then you come previous. Okay. Then we have who are capable to be a party to the negotiable instrument. Every person capable of contracting can be a party to the negotiable instrument. So a major person, sound mind, person who's not disqualified can be a party to the negotiable instrument. But the main question arises, can a minor be a party to the negotiable instrument? Act allows, yes, because minor can enter into contracts which are for his benefit. So minor can be a party to the negotiable instrument. He will bind all the other parties except himself. Let's say, for example, that X was the holder of a check. Okay, he's a minor and check was issued in his favor. He can transfer the benefit to Y. Y can transfer it to Z. What if the check is dishonored? Z can take action against Y, but he cannot take action against X. He can take action against A. Maybe he's the drawer of the check. So Z can take action against Y against A, but he cannot take action against X. Y can also take action against A, but no action can be taken against the minor. Case cannot be filed against the minor. So minor can enter into a contract for his benefit. He can be a party to the negotiable instrument for his benefit, but we will not be able to take action against the minor. You can take action against all the parties except minor. This is very, very important section, section 84. When the check is not duly presented and the drawer suffers damage. Now let's see, for example, that A issued a check of rupees 50,000 to B. When he issued the check, he had sufficient money in his bank account. But B said that the check's validity is for 3 months. I'll go aaram se. I will go late. What is the hurry? We have 3 months to deposit the check. So he went after 2 months and we realized that the bank of A has become bankrupt. Okay, A's bank has become bankrupt. Now B went to A and he requested for money. A said, when I gave you the check, that time I had sufficient money in my account. Now if you want to recover, go to the bank. I'm not going to give you another check. A is discharged to the extent of 50,000. So let's say if he had to pay 80,000 rupees, we will consider as if he has paid 50,000 rupees and now he will be liable only for 30,000. What will B do? He will recover that money from the bank. Whenever the bank is ready to pay, he will A can recover it. Sorry, B can recover it. Drawer is discharged in my example A. If he had sufficient funds when he issued the check ought to be presented for payment. That time A had sufficient money. If B would have presented the check on time, then he would have got the money. Sometimes students argue with me, but ma'am, the validity is for 3 months, so you can't force B to go on the first day itself in the first month. You can't even blame A for giving the check. See, we are allowing B to recover money not from A, from the bank. Whenever the bank has become bankrupt, but then they will pay, RBI is there to protect them. They will pay, that time you can recover. Holder fails to present the check within the reasonable time and the bank fails, the drawer suffers actual damage. What is the damage that the drawer has suffered over here? If B would have presented the check on time, he would have got the money and he would no longer remain a creditor in the books of A. Now B is still shown as a creditor. What will people think, that A doesn't pay his creditors on time? Who will go and tell them that A had given the check but B failed to present it? Who will explain it to them? So that is a damage. Then we have another set of important sections for exam. You can go through them later. Next, let us discuss the concept of holder and holder in due course. Very, very important for exam, or whichever exam that you are given, it is very, very important. We have holder and holder in due course. Now, to be a holder, you need 3 elements. Yes, and we had discussed those three elements, let me just revise it with you. To be a holder, you must have the entitlement to the instrument. You must be in possession of the instrument, and the instrument must be in your own name. Entitlement means you have the right to take action in case you don't get the benefit of the instrument. You can file a case in your name. You should have the possession of the instrument. It means you should have the delivery of the instrument. You should hold the instrument in your own name. If these three characteristics are present, then you are a holder. He must be entitled to receive the amount due from the parties liable under the instrument. All right. So you are entitled, you have the possession and the right to receive or recover the amount. Therefore, we can conclude that a thief is not a holder. Why? Think of the reason. He doesn't have entitlement. Finder, he is in wrongful possession. He doesn't have entitlement. Person in wrongful possession, he doesn't have the entitlement. It may not be in his own name. They are not considered as holder. Now, who is a holder in due course? To become a holder in due course, you first need to be a holder. You should take the instrument in good faith for valuable consideration, and the instrument must come to you before its maturity. Now, what is the privilege of a holder in due course? The privilege of a holder in due course is that he will get a good title even if the title of the transferor is defective. This is the main feature of holder in due course. Holder will get the same title as that of the transferor. If the transferor's title is defective, the transferee's title will also be defective if you're just a holder. But if you have taken the instrument in good faith for consideration before maturity, then you become a holder in due course. You will get a better title than that of the transferor. What are the privileges of a holder in due course? The first privilege, students, is that in case of an inchoate stamped instrument, you get the a holder in due course will be able to recover the entire amount of the instrument provided it is covered by the stamp. Now let's say, for example, X had to pay 15,000 rupees to Y, but he was not aware of the exact amount. This he came to know later. He had not closed his account. So X thought that maybe he had to pay somewhere around 18,000 or 20,000. He was not sure of the exact amount. So what he did, he signed a blank bill of exchange and gave it to Y. He said, see Y, I know that I don't have to pay you more than 20,000. So what I'll do is, whatever stamping is required for a bill of 20,000. See, you don't have to pay 20,000 as stamp duty. You have to pay certain percentage of 20,000. So he said, whatever amount that I need to pay on that 20,000, that much stamp I will pay. You calculate what is the exact amount due, fill in the instrument, and then you can claim it from me. So X signed the instrument which was sufficient to fill details of 20,000. It was sufficient to support a bill of 20,000. Y is very smart. He calculated. He realized that he needs to recover only 15,000 from X, but the bill can cover the amount of 20,000. And Y had to pay 20,000 rupees to his creditor Z. So he quietly filled an amount of 20,000 because the stamp was sufficient and gave it to Z. Z had no reasons to doubt. He saw that the instrument was properly signed, dated, it was endorsed, it was of 20,000 covered by the stamp. He accepted the instrument and then endorsed it to A to B. Now, Y is not the owner of the entire amount of 20,000. He is the owner of only 15,000. But will Z get the benefit of entire 20,000? Will A and B also get good ownership title? Yes, they are holder in due course. So even though Y had to recover only 15,000, if the instrument is in the hands of a holder in due course, they will be able to recover the entire amount of 20,000. That is the privilege of holder in due course. What is an inchoate instrument? It is either wholly or partially blank, but it is properly stamped and signed. It is delivered by the person signing the instrument to the other person. So that is why the other person can fill in the details and negotiate the instrument further. The second privilege, okay, so this is section 20, right? The second privilege is the liability of prior parties. Now, X drew an instrument on Y, Y accepted the instrument, X then endorsed it to A to B, and B to C. Students, you can pause the video anytime you want and copy these examples in your notebook or textbook. So X drew a bill, okay, he drew a bill of exchange on Y, Y accepted and returned it to X, X then endorsed it to A to B, B to C. Now C presented the bill to Y, Y dishonored the instrument. Okay, he dishonored the instrument. Now C can file a case either against B or A or X. He can sue all or any prior party. It is B who had endorsed the instrument. B had a financial transaction with C, but C, he's a holder in due course. He can recover the instrument's amount from any of the prior party. Section 36, all the prior parties are liable to the holder in due course. So this is one of the privileges of a holder in due course. In case of a fictitious party to the bill. Now, what is a fictitious bill? In case of a fictitious bill, both the drawer and the payee are fictitious person. However, the drawee is a genuine person. Now, pay attention to the example. X drew an instrument in the name of Z. Z is a fictitious person. He doesn't exist only. And he got the instrument, let's say it's a bill of exchange, accepted by Y. So Y is the acceptor. You can also call him the drawee. Earlier he is the drawee. Only after acceptance he becomes the acceptor. So X drew a bill in the fictitious name of Z, got it accepted by Y. He then endorsed it. Okay, he endorsed it to A by signing in the fictitious name of Z. So he created Z's signature. He created the first endorser signature, which can be Z or any payee. Okay, so let's say that P is the payee and he is also a fictitious person. But A is a genuine person. He took the instrument in good faith for valuable consideration before maturity and he endorsed it to B, B to C. C went to C went to Y and he demanded payment. Now Y is telling him, Hare, the bill was fictitious. We never intended to pay. Why should I pay money to you? I had no transaction with Z. Z is a fictitious person, but you are a genuine person. No? You accepted the bill. Now you will have to pay for it. So C, the holder in due course, will be able to recover the amount from Y. Poor fellow Y. He had to pay money even though there was no transaction. Yeah, he got duped. It's like, he is going to suffer loss. Why? See, Z does not exist. Why did you accept the instrument? What was the need to accept it? Were you helping someone? It means that there is a person X and you're trying to help him. Now, some students also ask me, ma'am, how come A accepted the bill? Didn't he realize that, okay, here, how come he accepted the instrument? Didn't he realize that Z is a fictitious person? He didn't have any transaction with Z, then how come he accepted? I think he had a transaction with X. And this is the beauty of negotiable instrument. You may not even know the drawer or the payee, but you still accept the instrument because these are instruments of credit. If anything goes wrong, law has given you the right to take action. There's no need to feel scared. So he accepted the instrument. Maybe he had some transaction with X and he accepted the instrument because it was endorsed in his favor. So he is a holder in due course. Okay, he is a holder in due course. B is a holder in due course and C is also a holder in due course. So even though the instrument is drawn in the fictitious name of Z, Y is a genuine person. He is liable to the holder in due course. In case of instrument without consideration, now X drew an instrument in the name of Y without consideration. Y then endorsed it to Z, that also without consideration. They are all helping each other. Z endorsed the instrument to A for consideration. A to B for consideration. When B presented the instrument, Y failed to pay the money. B can recover the money from either A or Z or X, any prior party. A can recover the money from Z or X, but Z, X and Y, they cannot file case inter se. Inter se means among themselves, because there is no consideration between them. So B, I'll write it over here, B can sue A or Z or X or maybe all. A can sue Z, X, Y. Okay, we can sue Y also. I'll just remove this or sign so that you don't get confused. A, Z, X, Y. But X, Y, Z, they cannot sue inter se, means they cannot sue each other. Why? Because there is no consideration between X, Y and Z. Okay, so whenever there is consideration, only then the parties can file a case against each other. Section 43. You want, you can pause the video and copy this in your notebook. Protection to subsequent holders. Once the instrument passes through the hands of a holder, in due course it is cured, it is purged of all the prior defects. So let's say that X drew an instrument on Y, then it went into the hands of a thief. Thief gave it to Z, who took it in good faith for valuable consideration. Before maturity, he became a holder in due course. He gave it to A, he also becomes a holder in due course. So once it crosses the hands of a holder in due course, it is cured, it is purged of all the prior defects. This section 58 is very important. Let's say X by fraud obtained a bill of exchange from Y. Okay, X committed fraud and obtained a bill of exchange from Y. He then endorsed it to Z, Z to A to B. Will B be able to recover the benefits as a holder in due course? Yes. Will A be holder in due course? Yes. Will Z be a holder in due course? Yes. What if B again endorsed it to X? Will X be a holder in due course? Tell me. Now, here X himself has committed fraud. He is not a holder in due course. But once it crosses the hands of a holder in due course, it is cured of all the defects. So the subsequent holders will get a good title. B again endorsed it to X. He will not get a good title because he himself is a party to the fraud. Okay, let me give you one twist. Z was aware of the fraud. He had knowledge of fraud. Will he be the holder in due course? Law says yes. He will be a holder in due course because he was only aware of the fraud. He was not a party to the fraud. If the instrument is endorsed back to Z, back to X, X is not a holder in due course because he himself is a party to the fraud. Is it clear? So if there is fraud, subsequent holders will become a holder in due course. But if you become the holder again, you will not be a holder in due course because you are a party to the fraud. Okay. Let us read it now. Holder in due course can recover the entire amount if it is covered by the stamp. Prior parties can be sued. Acceptance in a fictitious name. The same example is given over here. Without consideration creates no contract between the parties except holder in due course or anyone who has obtained a title from them. Holder deriving from a holder in due course has the same title. Then if you are a party to the fraud, you will not be a holder in due course, but mere knowledge will not impact his rights. However, this is very important. In case of forged endorsement, holder in due course derives no title. Now, what does it mean? Very, very important for exam. X forged the signature of Y. Okay, X forged the signature of Y. He is not a holder in due course because there is forgery. Forgery is a nullity. He then endorsed the instrument to Z, who took it in good faith for valuable consideration before maturity. Z will also not be a holder in due course. But why? All the other conditions are satisfied. Just because forgery is involved. Forgery is a nullity. It is void ab initio. See, you get the benefit when there is defect in title, not absence of title as in case of forgery. Here there is absence of title, so he will not get Z will not become a holder in due course. This is very important concept for exam. Next we have discharge of endorsers liability, section 40. Now F is the holder of an instrument. He endorsed it to G, G to H, H to I to E. Now E without I's consent cancels the endorsement of G and H. Once the endorsement is cancelled, it means that G and H are no longer liable to the instrument. Now, in this case, you have not consulted I. E, if your instrument is dishonored, you can file case against I, you can file case against F, but you have cancelled the endorsement of G and H without I's consent. Now he will not be able to file case against them, against his prior parties. Law says that as far as H and I are concerned, students pay attention to this. As far as H and I are concerned, H is the principal debtor and I is the surety. Yes, he's a debtor and I'm the surety. If your debtor is discharged, automatically surety is also discharged. That is what we had discussed in the Contract Act. So if E, you are discharging G and H without I's authority, I is also discharged. Okay, I is also discharged. So in this case, I will be discharged because H is like his debtor, debtor is discharged, I is also discharged, surety is also discharged. Material alteration. Now, whenever a question is asked on material alteration, you always need to write the definition. That is why I have mentioned it over here. What is the meaning of material alteration? Now, the word material means important and alteration means change. So material alteration means there is some important change in the terms of the instrument. Like I change the date, I change the place, I change the time, I change the amount without consent of the other parties. If I have not obtained consent of a particular party, that party is discharged. Only the ones that have given their consent to the change shall remain liable. What is a material alteration? Material means important. It is so important that it alters the legal effect of the instrument. The rights, the liabilities are affected. So material means that the alteration is so important that it alters or it attempts to alter the rights, obligation of the parties. It makes the instrument speak a language other than what was intended. I changed the date, I changed the time, I changed the place. It was payable at Mumbai, I made it Navi Mumbai. It was payable at Thane, I made it Nago Thane. This is an actual name of a place. Now, sometimes these changes are visible, they are apparent, but sometimes they are not. Like bill was payable 1 month after date, I changed it to 4 months after date. The instrument was for 1000, I changed it to 10,000. Sometimes the change is visible, sometimes it is not visible. So law says that the persons who have given their consent to the change, they are liable. Drawee, if he has made payment for changes which were not apparent, they were not visible, you can't blame him. If it is payable at Navi Mumbai, how do you know that Navi word has been added later, how will the drawee come to know about it? He went to Navi Mumbai and made the payment. So two things to remember. First is that only the parties who give their consent to the instrument will be liable. And the second thing which you need to know is that if the change is not visible, it's not apparent, you cannot blame the drawee for making the wrong payment. Any material instrument now which are authorized by the act, filling blanks of an inchoate instrument. Inchoate means incomplete. Now instrument was incomplete, I filled the blank. That is allowed by the act. Although it's a material alteration, it's allowed. Conversion of blank endorsement into full, we are going to discuss that. Crossing of check, crossing, alteration of a clerical error, general crossing is converted into special or not negotiable. They are material alteration, but they are allowed by the act. Any material alteration will render the instrument void as against the party who is the party to the instrument and has not given consent to the instrument, to the alteration. If you have given your consent to the alteration, you will continue to be liable. If you have not given your consent, you will not be liable. Next, we have negotiation. We know what is the meaning of negotiation. It means transferring the benefits of the instrument to the other person. In case of a bearer instrument, negotiation is by mere delivery. But in case of order instrument, you need two things, endorsement as well as delivery. Delivery is common, because that is the meaning of the word negotiable, transferable by delivery. So that is compulsory. Tearing and posting one half of the negotiable instrument is not a valid negotiation. Now let's say, for example, that X, for the purpose of safety, cut the instrument in two halves, kept one half with himself and gave the other half to Y by post. Then he changed his mind and he's calling Y to return the other half. Y is saying, no, this is like constructive delivery. You send your half, I am the owner. We have to decide who is the owner. Does tearing transfer ownership? Is tearing off half and giving half the bill amounts to giving off whole? Is it like a constructive delivery? No. In this case, X remains the owner. Him giving the other half does not imply delivery. Y will not become a holder. X remains the holder. He can recover the other half from Y. So tearing and posting one half is not valid negotiation. Then we have the types of endorsement. Okay, so negotiation and types of endorsement. What are the different types of endorsements? We have blank endorsement or general endorsement. In this case, the endorser will only sign the instrument without writing the name of the person in whose favor it is endorsed. He doesn't write the name of the endorsee. This endorsement converts any kind of instrument that you have made originally into a blank endorsement, into a bearer instrument. So you may have an original order instrument, but because of this blank endorsement, your instrument is now considered as a bearer instrument. But what if I write the name of the endorsee? Then it is known as endorsement in full or special endorsement. Restrictive endorsement, I say pay the money to X only. The within should be credited to Y only is understood. I am restricting further negotiability. Partial endorsement. X drew an instrument of Y for 10,000, Y accepted. Then X negotiated it for 4,000, 4,000 and 2,000 to A, B and C. This is partial endorsement. A then partially endorsed it to P, Q, R and he also endorsed. Now, if you start breaking the negotiable instrument and what if it is dishonored? People will keep filing cases. There will be multiplicity of action. Each party will take action against the prior party. So in order to avoid multiplicity of action, we say that partial endorsement is invalid. It is invalid. Most important, conditional endorsement. Conditional means I am imposing certain conditions. Endorsement will be valid only when those conditions are satisfied. Like for example, we have sans recourse or without remedy endorsement. Here the endorser is clearly mentioning that I will not be responsible in case the instrument is dishonored. Don't come running to me. I am endorsing, but without any recourse, I will not take any liability in case the instrument is dishonored. Like say for example, X endorsed an instrument to Y. So he drew an instrument, Y accepted, he then endorsed it to Z. Z endorsed it to A without recourse, sans recourse. It means that in case the instrument is dishonored, B can take action against A, but A can't take action against Z because he has endorsed without recourse. If the instrument is dishonored, don't come running after me. I am not liable. A, you take action against X. Facultative endorsement. Facultative means the person is very kind-hearted. Now, X has drawn a bill on Y. Okay, X drew an instrument on Y, then endorsed it to Z, Z to A to B. Now, Z has endorsed without, or I'll say facultative endorsement. Facultative endorsement. Now, he is a very kind-hearted person. He is telling the other parties that I know when the instrument is dishonored, you need to give a notice of dishonor, but you poor people don't have time. You need to get noted, protested. It's okay. Even if you don't give me notice of dishonor, I will continue to remain liable. These are all kind-hearted people. They are giving up their rights in the bill. Like, don't give me notice, it's okay. Sans phrase, that is without expense endorsement. Here, X drew a bill on Y, endorsed it to Z, Z endorsed sans phrase. It means that he is giving an indication to the other parties that see, if the instrument is dishonored, you need to get it noted, protested, and nothing comes for free. You have to pay noting charges. You pay the noting charges, but I am not going to bear them. See, in 12th standard, you had studied that when the endorsee gets the instrument noted or protested, whatever are the noting charges that he can recover from the endorser. But here he is saying, I will be liable only for the principal amount. I will not bear those extra expenses. That is your lookout. The last part of this act, negotiation back. Now, A has endorsed the instrument to B, B to C, C to D, D to E, E to F, and F again to B. Instrument is dishonored. So B can take action against his prior party F, F against E, E against D, D against C, C against B. B started filing the case and case is filed against him. This forms a circuit. Law says you started filing the case and case is filed against you. Leave it. Don't file case against them. Directly file case against a party who is not a party to the circuit. File case against A. What if this was a sans recourse endorsement? Like B had endorsed the instrument to C, sans recourse. C to D, D to E, E to F, F to B. Now, if the instrument is dishonored, B will file case against F, F against E, D, C. Now, can C file case against B? It is sans recourse. So, what happened? Okay. C will file case directly against A. There is no circuitry of action. Therefore, B can sue either F or E or D, C or A. So, if it is sans recourse, there is no circuitry of action. You can sue any prior party. And students, with this, we come to an end. Yes, definitely come to an end of the Negotiable Instruments Act. This was a rapid fire revision. Rapid fire last minute revision. I hope you guys enjoyed yourself. There are many other acts also. So without wasting any time, let us move to the other act.